So it's another of the Magnificent Seven set to release their figures. Hello, everyone. Monty here, market analyst at IG. We're taking a look at Amazon third quarter earnings set to release Thursday, October 26th. Hopes are that they'll be able to have that nice boost that they had last time around, but that means they are going to have to beat expectations sizably as they did last time around. So let's go ahead and get started. Figures courtesy of Refinitiv. Earnings per share expectations are we're looking at around 58 cents, slightly lower than what we saw last time around, though that was a significant beat of 65 cents when you look at quarter on quarter. And you look at the same period last year, it's significantly higher. That was just 17 cents. So over 3 times more than what we saw last time around. So when it comes to revenue, significantly higher, 145 billion. This is, by the way, if you look at Amazon in their second quarter earnings release, their own guidance for the third quarter was that it was going to be between 138 to 143. Analysts topping that, expecting 145 billion. What we had for the second quarter was 134 billion. And if we're looking at the same period last year, again, expected to be significantly higher from that 127 billion. In fact, growth is expected when it comes to revenue for nearly all of its key businesses, but there's always one that kind of takes the attention a little bit more than the others. That's when it comes to its cloud unit. Expectation is going to go up from 22.1 billion to 23 billion. But the thing is, it's not just looking at it quarter on quarter or even compared to, say, last year, because I know growth is always going to be an important factor, especially when you've got such high forward earnings estimate. But the thing is, it's also a relative matter because they're not the only ones with a cloud unit. You've got Microsoft, you've got Google, you do have others. And although they're working off of a smaller point or a smaller base, they did enjoy sizable and better gains in terms of growth compared to what we saw at Amazon. So that's something they're going to know. And the other item, of course, is the use, and this is just Amazon, but for big tech in general, the use in terms of AI and how the progress has been on that front. And the reason is if you look at from roughly start of the year up until now, there have been several negative risk factors when it comes to equities, but the one thing that has kept sizable inflows going into equities at times, it's not every single week, but you look at items like Refinitiv's Lipper and the weekly investor flows, a significant portion has been artificial intelligence. That's kind of what has kept a lot of them either staying within tech or if not adding and having these big sizable inflows. So they obviously want to see what the progress is on this front in order to justify, whether it's about justifying the valuations as well as justifying the flows that they've put in. Otherwise, they might do what they've been doing with a lot of the other sectors, and that is sort of taking a more cautious approach when it comes to investing in big tech or anything related to artificial intelligence. So that's no doubt going to be something that they're going to have to know. They're the usual items that they know in terms of what's happening on the logistics front, cost cutting, so on and so forth. But that's essentially is the gist for those. When you look at those big flows, if indeed tracking AI, if indeed tracking growth, these are the significant items they're obviously going to be looking at. What about when it comes to analyst recommendations? Still majority to the buy side, 15 strong buy, 28 buy. I want to say it is lower than what we saw a few months ago, but still very, very heavy to the buy side. 2 on hold and no sell nor strong sell with an average target of $170.33, which is significantly higher than where we currently stand. I'm not pulling up this chart so we can look at where price resides. We'll get to that later when it comes to technicals. But the reason I want to do is we want to map sentiment on our end, what our clients are doing when it comes to Amazon. And you can see here, blue dotted line, looking at the left axis as percent long. So if you see over here, blue dotted at around, 90, 95, 96%, that means that they're extreme buy 96% with only 4% going short, 4% of IG clients, I should say. And throughout this period, with the exception of this brief blip over here, you can see pretty much extreme buys. Anything above 78%, quite sizable. And they have been well in extreme buy territory for nearly the entirety of this period. That's from going back from December up until now. This is a weekly chart. So we're looking at roughly about 10 months of data. So you look over here and you can see that as price is going up, usually clients look for an excuse to get out, longs get out, shorts start to initiate, and you see majority buys start to come down, usually quite quickly, especially when it happens in a nice trend move. That's not been the case here. They're looking for an excuse to go to the buy side. Yes, as price went up, they did average lower, but all of it within extreme buy territory. And even then, the moment the price consolidated and pulled back, you saw them reverse that trend and start to increase and go back up to what is latest reading 91, 92% extreme buy. That's very high, even amongst big tech. I know big tech in general, IG clients on our end, holding heavy to extreme buys. Amazon definitely at the top, the upper end of that range. So that's interesting to know from our end that they're still looking for an excuse to go long. And I suspect that'll remain the case even if we see another move higher. So what about when it comes to technicals? I will pull up the chart in just a moment, but this isn't the bull average technical overview that we saw in the weekly time frame. The last time when we did the earnings preview for the second quarter earnings, back then price was within a bull trend channel. and that kind of helped keep the bull average technical overview intact. The levels, by the way, you can find all this stuff in the article. So I'm going to go ahead and pull up IG's trading platform and take a look at it for now. You can see over here this rough. I mean, okay, you try to get it within the channel, but roughly you can see that for months since mid-March up until about mid-September, you saw that it managed to generally hold. And the last time around, there was a big boost when we had the earnings release last time around. And since then, we did get the breakout of the channel and sort of settling a bit lower here. That's why I labeled the overview a bit more cautious consolidation. There's no denying that if you look at longer term time frames, like if you look at it daily, it's more consolidatory. You look at longer term time frames, it incorporates more historic data. And because you've got, it's up here versus down here, that helps give it a bit of a positive technical bias. It does help to keep some of the technical indicators looking a bit more positive, though. You look at it compared to, for example, key technical indicators that we look at, whether it's moving averages, whether within the band, and it has generally been I want to say, more neutral story. I wouldn't say not necessarily negative, but more neutral with a slight touch of positive bias, depending on if you're looking at on the DMI front as well as for the ADX, that's still in trending territory. So technicals don't hold as much significance, obviously, going into such a fundamental event. That is an added factor for keeping the overview cautious, and therefore conformist strategies are going to be usually after a significant reversal instead of fading. You definitely don't want to fade a move when you've got such significant volatility, because these levels, let's not forget, these levels are built for what are relatively range-bound weeks. It's been mostly controlled movement. So you can't take those numbers automatically and say, oh, well, this is going to hold under an environment where we have a significant fundamental event like earnings. But, at the end of the day, you traders out there want to know what those key levels are. And as a result, we've provided them. So good luck out there. Thanks so much for watching. Happy ticks.